Hey guys, welcome back to the channel. This is Future Trading with Mike, and today is March the 27th. It is Sunday. It's a non-trading day, but I wanted to talk about this amazing scalping strategy that I use each and every day that allows me to profit from the market, guys. A lot of you guys who have been following the channel already kind of picked up on, how this is traded how I trade each and every day in my live recorded sessions. So I'm a price action trader. I trade 5 days a week, guys. I like to trade the emini S&P 500. That's the ES, which is just a derivative of the major index, the S&P 500. And I love futures trading. I mean, I prefer it over any other type of asset class, whether it be the forex, options, stocks. I'm not trying to knock any of those, but I just like the futures because the futures just seems more consistent in trading. Okay. I always like to start off and thank those who have been following the channel, who are currently subscribed to the channel, and hopefully you already hit that little bell icon. That is to make sure that's the post notification to make sure that you never miss one of the uploads to the channel. Your first time watching, go ahead and watch the video today. I'll be talking a little bit about the strategy that I use, the scalping strategy, or strategy that I use that allows me to scalp the ES each and every day and make a profit. No, I'm not a position or swing style trader. I like to day trade and look for trade setups and get in and out the market and look for my next setup. So if this is your first time watching, go ahead and watch today's videos. I have tons of other videos on the channel, guys, where you can see me trade my live recorded session. You can see me trade this particular market, the ES, each and every day, 5 days a week, during Monday through Friday. Okay, I typically trade shortly after the opening, about 15, 20 minutes after the open. I start looking for good identified levels or high probability levels to trade from. Okay, so I'm a scalper by heart or by nature, and that's what I like to do. So I typically trade for about maybe an hour and a half. Most times I'm in the market at 9:30. That's Eastern time, 8:30 Central. I'm looking at the market shortly after the market opens, and then I'm typically done somewhere between 9:30 and 11:30. Okay, I'm typically out of the market. Some days are quicker than that. Some days could be less than an hour. And those who have been following the channels, you see that I pick up ticks pretty quick throughout the session. So I just wanted to share this, the strategy that I use again with. Maybe this is your first time watching, and it allows me to scalp the market for a few points on each trade or whatever the case is. It just depends on how the price is moving, though. That's the biggest thing. A lot of people say, well, ask me, well, how many ticks or how many points are you going for each time you get to the market? It just all depends, guys. It all depends once you get, once you have that identified or marked zone. How far, if I'm going long, how far means of resistance, an area of resistance is above me. That could possibly pause or stop my trade. So that's the thing about trading is at any given point in the market could be a reversal. It can happen at any time. So you just have to trade your setups and try to get the most out of it, or try to profit what you can and just wait. I mean, you can't sit there and beat yourself to death. Like if you get into a trade and then all of a sudden it's like, oh, I could have picked up 5 more points. Well, that's that can happen, but as traders, as long as you're profiting, that's a good thing. And I always say you should be green on a day and never red on a day. Not saying you shouldn't, that you won't have a losing trade. We all have losing trades, guys. But the thing is about it is that's why you have either a break-even point or know your stop limit as far as where you're willing to get, where you need to get out at. Okay, so what I like to do in my plan is I always like to start off by looking at the higher time frame, and I say this in each one of my videos. I always like to look at the higher time frame, and what we'll do is we'll look at the prior day, which was the 25th, Friday. This is the 60 range. I like using the 60 range charts. I mean the range charts, guys. I don't use the minute style charts or volume or tick, whatever the case is. I use range. The reason why I like to use range to me is just it looks cleaner. For a scalper standpoint, for scalping, I can look for possibilities of multiple trade setups within a session. So, all right. So, and looking at the market right now, we have a high the high from Friday is basically sitting up here at just say around the 40 area. Now, 40 and 70 areas are hidden pivots that a lot of people don't know about in the market. Most of you know about the round numbers and the half numbers, but I like to look at the 40 and 70 areas as well. So price did come up to this 40 area pretty much, and it bounced, rejected. That was around 11 o'clock on Friday. So, but what I primarily do is I like to see when I get into setting for my charts, I want to first of all classify is the area I'm looking for areas where price can actually reject it. Okay, meaning is it going to move or is it tapped into an area of supply? Okay, so if I look to my left of my chart, first of all, let's mark that area. Let's mark that high sitting up there at, let's grab that at 40, let's say right there, okay? So I'm going to look to the left of my chart now. It's on 60 range, okay? And I want to see if, what is that, 45, okay, right here, 45, 40. Now this is on a higher time frame, okay? I'm looking to see if price is in an area possibly where it can be supply at, where price form structure to the downside and breaking structure, okay, to the left of it. So it's forming structure, meaning breaking support here, and then it pushes lower, making a new low, and then breaking structure to the left of it, okay. And price does here. It pushes down, pulls back, pushes lower, breaking structure over here, but it also breaks this through this area of support right here, okay? Now, when price pulls back, okay, to this area right here, this is a good solid resistance area here to where I can look for and possibly where price will probably pause at, reject possibly, and can look for maybe shorts, but I just don't take the short right off of my 60 range chart. I scale down to a lower time frame chart, okay? And for my standpoint, or for me, it's the 12 range chart. My 12 range chart is my anchor chart where I start marking my zones at on my areas. But I'm gonna go ahead and mark this area here. We'll put a rectangle. I want to mark this area right here. It is in somewhat of a little. I'm gonna say it's in a low volume area right here. Okay, because I've said this all the time on videos. Price likes to move from a high volume area through a low volume area to a high volume area, but also be mindful that low volume areas, LVNs, can be subject to areas of support and resistance as well. Price could move into that area, reject, and then push back down below to the high volume area. High volume HVNs to me are like barriers. It means of protection. Is price likes to trade to them. It's an area where it's comfortable at because it's a means of protection. In this standpoint, on this instance here, we have an area right here where price could retrace back to. It's a 40 area confluence. We have a what I call a supporting swing coming out of this bigger swing right here to the downside right here. So the supporting swing is an area where price could push pull back to, okay, on a retracement as it did. I'm gonna show you when I go back to the right side of the chart. So price can come up to this rectangle area here. It's a little high volume area within the low volume area. I always like to, if I'm going short, I like to take my trades from the upper end, the outer edge of a high volume area, I mean the top of this little area right here, okay? So I've got this marked off here, and let me do this. Give me 1 second, guys. Okay, so we'll take a look at this area here. I want to, give me 1 second, guys. I'm gonna bring this up and put it on the 12 range so you can see it as well. Okay, all charts, we'll just do that. Okay. All right, so now we'll go back to the right side of the chart here. I must have did. I must did not. So where's it at? Let's go back right here. Okay, so we'll just do this. All right, so let's see if it's going to show on the 12 range. No, it's not because it's way over there. Let's see. All right, so give me 1 second. Okay, so being it's so far back, this is from I think the 9th or 10th of February. So this rectangle area, I'm gonna go ahead and mark it with that red line right here, and that way we can see it off of the when I scroll here to the right. Okay, so it'll also show up on the 12 range chart as well. So this is the area right here, 45, 40 area right here. Okay, now this was 11 o'clock on Friday. Okay, so now we'll go over to our 12 range chart. Okay, and this area right here. So pretty much it's really 1045, 1050, somewhere around there. All right, so now that price has tapped into that area, what do I want to see? I want to see price reject. It's tapped into that area off of the 60 range chart, okay? So I just want to jump into a trade. I want to see, all right, prices pull back to an area of a good area of resistance, say for instance. To me, that's a supporting swing off that bigger swing, okay? So I see the rejection happen, okay? Now what do I want to see? What do I want to see? I want to see price start breaking structure, meaning give me clearly give me clear confirmation that it wants to start moving to the downside, okay? Then once it starts breaking structure to the downside, this is where I'm gonna show you. All right, it rejects here, okay? The area off the 60 range chart. These are areas of structure where I want to see price start breaking. Okay, I look to the left, the structure where price is making swings to the upside. Now I want to see price start breaking structure to the downside, breaking structure to the downside. Okay, so it starts to do that. All right, rejects here, pushes down, okay, pushes lower, pulls back, pushes lower. Okay, so now that it has broken structure, it's pushed down, pull back, broke lower. It broke through support right here, this low right here, pull back, then made a lower low. All right. Not only did it start forming structure to the downside, but it started breaking structure to the left of it right here. It swings to the upside. Okay. So now what am I looking for? I'm looking for areas to where price could pull back. Now it's done. First of all, first step. What has it done? It's rejected the area of a supporting swing, which was resistance from the higher time frame, the 60 range. That's that red line at 45, say 40 area, okay? All right. Step two, second most important thing. I need to start seeing break structure on my lower time frame, whatever anchor chart you use, okay? Lower time frame. Breaking structure, meaning breaking market structure, where you see where prices pushed, forming structures where it made higher highs and higher lows to the upside. Now it's making lower lows and lower lows to the downside, forming structure to the downside, breaking structure, which was previous to when prices moving to the upside. Once it starts doing that, step three, now I can start looking for identified areas where price either had a good rotation on an area where price could pull back, where there is a good rotation, or an area where there was solid accumulation of selling in the market, okay? So that's step three. Now that we broke structure to the downside, okay? Now, price pulls back. This area right here, where price broke this low right here on this higher high, higher low, pulling to the upside, move to the upside. When it broke structure to the downside here, this area right here, okay? It pulls back. But typically what you want to see is price pull back to the actual supporting, to the area of resistance above, okay? And it didn't do that, okay? It pulled right back pretty much to the low of this structure right here, and then continue pushing lower, okay? As you guys can see that, okay? All right, so could you have taken a short right here? If you were looking at a lower time frame, maybe the 4 range, and saw a micro swing area right here, which would have been a supporting swing that where price broke through this area right here on the pullback here, you could have possibly got into an entry, okay? But that's okay. So what happens then is that price continues. So let's say we miss this move to the downside, okay? Let's say we miss this move to the downside, all right? So price pushes lower, okay? So now we can start looking for areas to where, all right, where can I get into a trade on a pullback, okay? So price pushes lower, pulls back, pushes lower, pulls back, pushes lower, all right? When price made this swing, continuation swing to the downside, it broke structure right here as well, okay? It broke this swing, this low of the swing to the upside. Also, it made a low pullback, broke structure here on the way down. So it broke structure, okay, here, and then it broke this low right here when it finally swung to the downside. Now on the pullback to this area right here, let's see. Right here, I'm a scalper now, guys, okay? This here, right here, is an area, okay? Right here is an area to me, an area of supply on a pullback where I can, if I see the rejection, okay, red candle closes to the downside, guys, I'm short. I can take the short from here down to here. So let's say the close of this red candle here was at 45.06, okay, 45.06 and a half. I could take that trade on down to say 45.05 45.02, 45.03. That's 2.5, 3 points right there. Okay, it adds up if you look and know how to scalp the market correctly. So price pulls back to this area, to this swing right here. Okay, this area here of resistance. Candle closes. This right here, I have it marked off with this rectangle. You go short. Okay. Yes, I'm talking about these things after the fact, after the market's closed, but you see me do it real time when I'm trading. I get the pre-market analysis pretty much of what I'm looking for throughout my session. I start market levels, and you see me take those trades on those pullbacks to those high probability areas. Why right here? Okay. First of all, I'm price pushed down here, pulled back, and made a lower low. There was accumulation of selling that took place here. Price push down, push lower, selling. A lot, there was a good amount of selling that took place in this area here on a 12 range chart. Okay, price pulls back to that area. I mentioned it breaks structure on the way down, breaking here, forming structure on the downside. I want to take the trade on the pullback to where the accumulation of selling originally started happening. The origination of selling, the initial selling started taking place when it first started happening in this area within this swing to the downside, not right here at the neck, what I call the neck of the swing of the area of resistance, more so tucked back into the swing, okay, because that's where the accumulation of selling started taking place. So price pulls back to that area. Okay, I say, okay, this could be a good area where price rejects from. I look below to see how far price could actually move before it actually may pause at. Now, here's the thing. Price pulls back to it because we do have areas of support right below us. Price could actually come all the way back down to this low, okay? So typically when you do a pullback like this, what you could do is on the rejection, you could put in, let's say you got 2 contracts, okay? 2 contracts on. You could take your first contract off. Once you see the rejection, red candle closes below, you go short, take your first contract off, maybe around the 45.03 area, okay? Because price does pull back. It's going to ebb and flow. It's going to push down, pull back, or push up, pull back. So first contract here, all right. Your stop is going to be right above 45.09, say 45.10. Okay, that's where I put my stop at. That's my mental stop at. That's exactly where I would get out of the trade at if price comes back below. Comes back higher, because what that does is that area there is it's break even for me. I know if I get out right there that if price starts to pull higher, the more likely it's going to want to push higher. Okay, so you can put your stop 1 tick there or 2, 3 ticks above it, or whatever the case is. That way you're not taking much risk on. Price comes back against you. But this is a solid area to take a quick short from. Okay, all right. So first contract off at say 45.03. Price pulls back. If you're still in the market wouldn't have it taken you out. It would have got kind of close to it because it almost comes to the top of this candle right here. That red candle, the top end of that red candle where that wick is there. By about 2 ticks, 2 or 3 ticks. Price turns back around, doesn't stop you out, continues pushing lower, and it comes down, does what? Test the low of this swing. Okay, so that's how I scalp. I always start off with the higher time frame, see if it is tapped into an area of a supply or demand. Okay, which can be a supporting swing within a bigger swing. Okay, if that happens and price is in a good supporting area from a swing where it was, say for instance, continue pushing to the downside, price pulls back into it, like I showed you off the higher time frame, the 60 range chart, 45.40, okay, and 45.40 is not only was it a supporting swing, an area of say supply on the 60 range chart, it was the 40, 45 or the 40 pivot area, supporting swing, area supply, say for instance on the 60 range as well. It was sitting right there at the outer edge, or the upper edge of a high volume area, small high volume area within that LVN. So those kind of things I look for confluency. So then like I said, I switched my mind over. My mind shifts from looking at that. Okay, I marked that area on the higher time frame. I'm looking at the 12 range now, my anchor chart, to start marking areas or levels or zones on my 12 range to where price can retrace back to. But I gotta see, like I said, I have to see price breaking structure, meaning breaking swings to the downside, and it does. Okay, it does. Here would have been a little iffy for me because Price pushes down and it pulls back. Could I got a trade right here? It's possibly, but what I didn't see was a red candle closing and breaking below this little structure right here. This the end of the bottom end of the swing here. I didn't see that. What I saw was price pull down, wicked out here with a little candle, kind of bullish candle to back to the upside. Okay, and then it closes lower. Now, if price would have maybe pulled back up to this area here and gave me a second retest, yeah, I would have went short there, but it didn't do that. It kept swinging to the downside. But this area here was a solid area to actually to look for retracement on a pullback to go short. Okay, so I just wanted to kind of do a little video about the strategy. The simple strategy that I use every single day. And I'm going to kind of just restate these things in videos. I want to make sure that people are getting it. I don't care how many times it takes me to to do these little videos here or to discuss the strategy within my live recorded sessions. I just want to make sure that people, this is the way, I'm not saying to trade like this, but it's a way of how I trade. This is a way how I scalp the market. People see me doing it and they comment, and it's just a quick way, a measure of being able to profit in the market every single day. I do not like the positional swing trade. I'm not saying this, that you can't do it, because people make good amount of money doing that, but you have to ride that trade. And when you're in a swing or position trade at a certain level off a higher time frame, it could be, I don't know, it could be a 1 hour chart, 4 hour chart, it could be a daily chart, or whatever the case is. But the thing about doing that is, once you're into a trade, is that price is such, the swings are so large that when you get to a trade, price can move a little bit down. If you're going short, pull back significantly. Okay, so when you actually taking profit, or not taking profit, but making profit, price can pull back, bring you all the way back to break even, and then you get scared of the market, and then it starts to move lower. Now, there are people who have that trade like that, and there's nothing wrong with that, and they're looking for big moves in the market. Not me. I'm not that type of style of trader. That's why I said you have to pick and choose what style of trader you want to be. If you want to be that big position swing style trader where you want to ride the market for a full session, or for a full day, or for a week, whatever the case is, that's just not me. I'm a day trader. I can trade every single day. To me, I treat it as like a job. So Monday, Tuesday, Wednesday, Thursday, Friday, I'm working. I'm in the market. I'm taking on a few trades and make a profit and get out. Wait for the next day session. Okay, so it's just like working. It's like 8 to 5, 9 to 5, whatever the case is. Make that money for that day. Then I switch over, move over to the next day. Same thing. I'm working again that day. So I like to treat trading as like a daily job. Okay, so that's how I like to do it. But anyways, guys, I didn't want to kind of talk about this in a lengthy video. I just want to kind of show this, this amazing scalping strategy that I use is the way I use it each and every day in my trading, and it's just a few steps. Simplicity, I always say: be patient, have discipline, and simplify your trading. Okay, so patience, have the discipline, and simplify your trading. Or if you want to switch it up and say, simplify your trading first, meaning, to me, I don't have a bunch of indicators on my charts, whatever the case is. I like trading pure price action pretty much. I do use, and the pure price action, and the number two thing that I have to see, I like to see the volume profile. Okay, so simplicity. 2 for me is being patient and having discipline, guys. Patience, discipline kind of fall in line with the psychology piece of, things that you have to work on the inside of you. If you're not patient, then you're going to struggle trading. If you don't have any kind of discipline to where you have a structured mind to being able to see certain things and not want to be into a trade in every single second of the session, then you're going to run into some brick walls, guys. Okay, so I appreciate everyone who's tuned in and watched this video today. It's your first time watching this video here. Hopefully it was beneficial and you found some tips, some hints, or some tips, or some beneficial facts that maybe or things, just whatever how you want to call it, some little trinkets that maybe help you in your trading each and every day. So I'm gonna go ahead and sign off here, guys. I appreciate everyone watching. And I'll see you in the next video, guys. Take care. Yes, first time watching the video, please take the time to go ahead and hit that sub button, that subscribe button, and make sure to hit the little bell icon and have all your post notifications turned on so that you never miss one of the videos. Thanks, guys, for watching today's video, and take care. Have a great rest of your weekend.